Good morning, guys. Thank you guys so much for tuning into today's live stream. Today is May 8th, 2025, and yesterday was FOMC. I do wanted to show you guys, let's go over some of the economic news here for today. So we have unemployment claims, non-farm productivity, nothing too eventful besides this one, unemployment claims, where we actually declined from previous month, and it was actually lower than forecasted. So this is pretty good. Right, this is like a core indicator of recessions or just like slow economic growth. But you know, with the numbers being lower than usual or lower than expected and lower than previous month, it's not good that we have unemployment, but it's not, you know, relatively that bad compared to like 2021 and like during these numbers. But yeah, so that is some volatility that could be injected due to the unemployment claims. But onto the actual technicals here for today. One thing that I do want to mention is that we are relatively close to the previous week's high, which is my weekly draw of liquidity. So let's see here. So this is the weekly candle from last week, right? And this weekly candle, you know, it's pretty bullish. The easiest assumption that we can make here is that we're most likely going to take out the weekly high, and the weekly high is right here, and I'll denote that by a green line. And so I want to see prices take out this high. However, coming into like this week, we never had a daily candle that aligned with the weekly objective besides Monday, and Monday we ended up just kind of drifting off. And so you know, coming into maybe today or tomorrow, I would like to see us complete the weekly objective and just continue to expand higher. But yeah, that is the weekly time frame's objective. Coming into the specific intraday time frame, I would rely on let's see here, I would rely on the 4-hour time frame, so this candle right here, and I would rely on the 8-hour candle right here for a intraday bias, right? Once this candle closes and once this candle closes, there's more I guess data that you could base your objective off of. And yeah, I'm going to rely on those time frames for an objective, right? Just like how I was using the weekly time frame as a weekly bias, I could use the 4-hour, I could use the hourly, I could use the daily, I could use the monthly for a bias, for an objective, because every single time frame has an objective, right? Because prices is fractal. There's this quote that ICT stated, and it stuck with me ever since I got introduced to it, and it was, if you're able to view a 4-hour candle as a daily candle, a new world's going to be opened up to you. And the way that I'm interpreting that is this. So daily candles, right? Like let's let's take a look at this daily candle right here. It's bullish, right? The easiest assumption for us to make here is that we would most likely take out this daily swing high. And what do we end up doing here? So this is that daily high. And what do we do as soon as we open up in a new daily candle? We take out the daily high. It's a lot of these, like, I guess, the ways that I trade, it's really pretty much based off of power of 3. So like, if you can apply that same concept to the 4-hour time frame, the hourly time frame, any time frame, any candle, you are going to be presented with a lot of possibilities. And so, like I said, coming into today, I'm gonna rely on the 4-hour time frame and the 8-hour time frame for a morning objective, and then perhaps maybe the 6-hour candle and the 10-hour candle coming into the afternoon session. Yeah, that basically wraps it up for what I have for today. We did get really close to taking out previous week's high, but we ended up not taking it out, which is kind of interesting. You see, coming into this morning, I would watch and see if we could. I just want to watch and see how we close on the 4-hour candle first. But let's just say that we close bearish on this 4-hour candle. If we were to close bearish, then my easiest assumption to make is that we could most likely take out the 4-hour low and the 8-hour low, and then continue to expand towards the discount of this dealing range, which is denoted by that green box, right? So there's a swing low here, and there's a swing high here. A swing low and a swing high creates a dealing range. And because of this dealing range, I could use and I could rely on the idea that prices would trade into this discount level here, right here, and then perhaps maybe retrace back into the discount, so buyers could have a chance of buying in discount. And then let's see, and if we do end up taking out that discount level, then yeah, but I would like to see us maybe retrace back into the discount here if we do close bull or bearish on the 4-hour candle and the 8-hour candle. Oh yeah, yesterday, I forgot to mention, but yesterday was FOMC. And it turns out that the central bank did not lower the federal funds rates. And which is what I read on an article, was that the Federal Reserve, they do not want to skyrocket prices. They don't want inflation to get out of hand. So they're a little bit more hesitant, a little bit more patient about their approach, because if they lower the interest rates. Yeah, bye man. If they lower the interest rates too early or too preemptively, then that could lead to a hyperinflationary environment. Bye man. Environment, and it's just that's a area that they do not want to enter. So they're being a little bit more cautious, right? They want to wait for more economic data to really highlight and state the fact that we are slowing in growth. But like with news like, and unemployment being like lower than usual, or lower than forecasted, our GDP did contract, but I believe the GDP contracted because of the fact that people were really stockpiling the goods, and they just bought a bunch. So imports were just relative, like they were really high because if they were just stocking just in case that tariffs get out of hand. But yeah, so GDP did contract, but like everything else here, you know, number of people. Right here, non-farm employment change 62K, and on Friday, we actually had an increase of change in number of unemployed people, so 177,000, which is pretty good. Change in number, I mean, we don't have that much signs telling us that we might be like slowing in economic growth. Okay. But the consumer confidence is at like all-time lows though. If you guys take a look at the economic, like, you know, rates, anything that has to do with consumer confidence, we are like pretty fearful, I would say, not certain. They're not confident in the economy and the structure right now, but we'll see. Core PCE did actually drop down to 0. Let's highlight this right here. Actually, I do want to ask ChatGPT why this could be a bad thing. Yeah, I mean, okay, this could indicate that there might be a slowing in growth. Lower PCE than expected and lower than previous. Oh yeah, well, that's pretty interesting. Going back to the technicals. Yeah, I mean, coming into today, like I said, coming into this morning, I really do like the idea of us retracing back into the discount of this dealing range. We still have about 15 minutes left, give or take. So I don't want to really confirm a bias, but like it's looking like we're most likely going to retrace back into the discount of this dealing range here. So let's see. Who knows, we might retrace back into it without giving me a entry pattern, without giving me a model. But yeah, I do want to see us continue lower here into the discount of this dealing range. That would be my draw of liquidity. Maybe we might do it right now. Who knows? Oh, look at that. So you see that nick? We nicked into the discount of that dealing range. That counts. So I can't use this dealing range anymore. So let's see if we can do this maybe. Because that's another dealing range, right? On the hourly time frame. Swing low, right? It's a low that has a higher low to the left of it and a higher low to the right of it. That would be considered a swing low. All right. just continue to see. Like I said, I'm gonna allow prices to close and act, or let the 4-hour candle and the 8-hour candle to actually close before really confirming a bias. But for now, I'm just gonna, you know, maybe hop into a chess game or something. I could just I'm just gonna push out this bishop. I'm really gonna chase that bishop down. Which is fine. I think I might just prepare to castle here. This is fine. I'm gonna just hit the castle. That's coolio. Completely fine too, because I could just. Okay, I actually don't want him to go. I'm gonna go here and attack this knight. So I'm preventing that knight from going here, and then I'm gonna okay. Wonder if he's gonna go do this. If he goes this, okay, interesting. Da 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 da. Da, 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 da. Actually, because he can just go here. Okay, maybe I do need to protect this some way, somehow. Oh, nice. Look at that. We retrace back into this discount level too. Okay. I think the idea is that he's probably going to go right. Yep. I don't. I'm gonna try to attack this. Attack his queen, and then This is an interesting predicament here. Attack this pawn. I think I have a. Okay, I think he just trolled. Yeah, this is fine. I think I'm chilling now. I have a, like, not even a bad position. This is good. This is quite splendid. Very, very, very good. My bishop, I need to get my bishop more active, but it's kind of like in a wonky, very interesting position. Oh, he's trying to get that mate right now. Okay, I see. I see. Like this. Oh no! Bro, I've trolled my games countless times now. That's not even. Oh my goodness, that's actually unfortunate. Oh wow, I was winning. I mean, I had this move. Oh, I would have made it even. I didn't have that move. No. Was it just here anyways? No. Because yeah, I have to watch for the threat of mate. So what is the move? Alright, well, we'll see. I just want to see what that move was. Huh. Yeah, whatever. That's unfortunate. You win some, you lose some. But going back to the technicals, looks like we did retrace back into the equilibrium in the discount level of this dueling range as well. If we do end up getting more bearish pressure here coming into like the afternoon session, then I would move down my discount, or I would move my whatchamacallit, my monthly dueling, or this dueling range here, down to here, and then the discount level would be here. But that's if we do end up getting really bearish. I don't think we're gonna get that bearish, but who knows? We might. Always got to be, you know, on our toes here, but yeah, coming into today, coming into the morning session, I'm relying on 4-hour time frame, 8-hour time frame for a bias. About a minute and 30 seconds left. Looking like we're pretty bearish right now. And I just want to reiterate the model, the strategy that I have, it's super simple. Like right now, ask yourself this. What is the next 4-hour candle's gonna do based off of this previous 4-hour candle's closure? It's just keep in mind that this closure right here is bearish, right? Like the easiest assumption that we can make is that we're probably going to take out the 4-hour low. And then there's steps after that that you have to kind of like take to understand where prices really wants to, to confirm that bias. But like for me here, even though I have a higher time frame objective, sometimes I might not get a model to really align myself with that and to align myself with the higher time frame objective, which is completely fine. But as long as I have an idea of where prices wants to go, 5 seconds left. And the draw is this low right here. That's the draw of liquidity. I want to see us take out that red line. And let's see. We might complete the objective within the next 15 minutes. $30-minute candle looks bearish. Still bearish draw of liquidity. I'll do one more chess game and then I'll do a recap of the pros and cons here with you guys. But yeah, hopefully you guys are able to kind of understand the way that I view prices. It's a simple approach, but it gets the job done, right? It really enforces the ideas of just keeping it simple. No need to really make it too, I guess, difficult. I go here. I don't know if that's the exchange, the ideal exchange. Am I allowed to do this? I could threaten checkmate here. Why not, you know? Why not? I feel like I can infiltrate. I just need this square. He needs to do something fast. This is interesting, Mike. I'm flanking him from the side. I mean, he could go here, and I might be too slow because he can just castle. No, he can't because he can't even move his queen. But now I'm threatening mate. I'm threatening mate. I'm threatening this rook. He can go here. And that's mate. Bro. Wait, I don't even know if I was in right position. Is this winning for me? Or is it... Wow. That was... What an infantry. This queen carried that game. Okay, so let's go into the pros and cons here, and then all right, so trade checklist app. So this is the pros and cons here for the week of April 21st. No, it can't be April 21st. For the week of April 28th to May 2nd, sorry. But yeah, so the first pro here coming into this week that I can just continue to work on, right, is taking consistent trades. I need to be consistent in the approach that I have. Like here today, I want to be consistent, right? Even though I have a general idea of where prices should go, I'm not, you know, coming out trading today like I know everything. I'm staying consistent with the way that I approach, and I know what I'm looking for. I'm going to implement the 3 components that I require: a higher time frame objective, a model, and an entry pattern. Those 3 components, right, makes me consistent. It keeps me consistent. It keeps me in check. And then to kind of reiterate or just kind of go into a deeper dive of what a higher time frame objective is, it's simply a higher time frame objective is simply a bigger reason, a macro perspective on why prices should continue in a specific direction, right? So like coming into the morning, how I was highlighting the discount of this dealing range, right? Even though, you know, I saw that we were probably going to close bullish, I wanted a bigger reason, a macro perspective on why prices should continue in a specific direction, right? I wanted more confluence to give me and really like strengthen the idea that lower prices is like I wanted another reason for why prices should continue lower, which is why I have a higher time frame objective, right? It shows me where it gives me a bias, and all that I need left is some sort of, model that aligns me with the higher time frame objective. And there are two objectives or higher time frame objectives that I'm really looking for is expansion model and EQ model. And if I go back to the charts right now, so you guys can kind of see where I'm coming from here. So this hourly low that I'm drawing with this red line is the same low as the 4-hour low and is the same low as the 8-hour low. And look at what we just did. We traded up higher. We opened, we manipulated, we traded up higher, and then we ended up taking out that 4-hour low slash 8-hour low slash 4-hour low as well. So we did complete the objective, but I didn't have that, I didn't have a higher time frame objective or a model to kind of align myself with the trade idea. And and the last thing is the fair value gap. Fair value gaps are always going to be the way that I enter into a trade. There's a lot of, entry patterns, and there's a lot of like blocks that ICT introduces to us. There's, order blocks, there's breaker blocks, mitigation blocks, there's all sorts of blocks. The main entry pattern, the main thing that I use for my trading style is a fair value gap. A fair value gap is essentially a inefficiency in prices, whether that be a buy-side imbalance, sell-side inefficiency, or a sell-side imbalance, buy-side inefficient. That's it. So there's a BISI and there's a SIBI. Two sorts of fair value gaps, but essentially they show you and they indicate to you where there has been strength and there's been displacement in the markets. And it's really easy to see, fair value gaps. Like if you open up the chart right now, like, fair value gaps are like, there's a fair value gap here, fair value gap here. And you're probably thinking like, okay, there's a lot of fair value gaps. What do you know? How do you know when a fair value gap will be like supported, right? When it should be respected. And it all comes down to a higher time frame objective and a model. If your fair value gap supports the idea of higher prices and your higher time frame objective and your model does so as well, then you have more chances, a higher probability of that trade playing out. So you always need the alignment between those multiple time frames, right? From the hourly, you go from an hourly higher time frame objective, you can go onto the 15-minute model, and then maybe perhaps the 1-minute fair value gap entry pattern, something like that. And what can I continue to work on coming into this week? For me, it's to really fundamentally understand a discounted cash flow model and how to structure one out. For me, yesterday I was working on understanding a unlevered and a levered free cash flow. And imagine a unlevered free cash flow model as a model that captures the entirety of the company's capital structure. There's no, it's agnostic, meaning that it doesn't really like I don't know if discriminate is the right word. I don't want to. It doesn't favor debt or equity capital, right? It captures the entirety of the capital structure, and then using the walk, that's kind of when it kind of takes in account of the different structures in a company, right? So one company could use all debt and another company could use all equity. Some might use a mixture of both. But that's kind of the benefit of using a unlevered cash flow, is that it captures the enterprise value. It captures the entirety of the company's value, And then you can bring that enterprise value onto equity value by subtracting the debt and adding back the cash. But yeah, that is what a unlevered free cash flow model is. And a levered free cash flow is whenever you have to only incorporate the equity parts of the company, right? Because as a shareholder, you don't care about the debt, right? The debt interest and the income of the debt doesn't go to you. It goes to the debt investors. But as for equity investors, you care about the remaining, the last portions of cash. That's kind of what I learned about DCFs from yesterday. But still working on it. I'm still trying to learn how to really come up with assumptions, and I feel like assumptions that you have to make about a company is the most important and the most, like, I guess, hardest part about creating a DCF, right? Because you really have to understand the company's business model, not even just the company, but the industry as a whole. So let's just say that I'm doing a DCF over NVIDIA. I have to understand where the technology sector is going, how AI is going to be growing, and how much demand there will be for AI chips, and just like NVIDIA as a product in general. I have to have a really good understanding before I can make assumptions that are accurate or close to being accurate. And so that sums up the pros and cons. And for me, the improvements here for this upcoming week, just being consistent, right? Requiring a higher time frame objective, a model, and an entry pattern. And then to review higher time frame objectives and how to really align myself with the higher time frame objective through my model. That's gonna wrap it up for today's live stream. I'm thinking if I do want to go over so I'll go over a trade here that encapsulates the equilibrium model. So this is a trade here that I took on March 24th, 2025. And it looks like this is based off of the daily time frame. And so there is a dealing range from this swing high, 12-hour swing high, and to this swing low right here. The idea of this trade is that prices should continue higher to retrace back into the premium of this dealing range here. So I want to see prices trade into this red box, right? That's the bigger reason, that's the macro perspective of why prices should continue higher. It just allows me more confidence, more confluence, and more of a reason for why prices should continue higher. And how am I aligning myself with that idea is based off of this daily candle here and this 12-hour candle. So based off of this 12-hour / daily candle or model, my model's objective would be for prices to take out the 12-hour high and the daily high. So going from the 12-hour to going from the 12-hour, I go into the 1-hour time frame, and I see that there's a 10-hour fair value gap, and prices should rebalance this inefficiency and should respect it to continue higher, right? So we should trade into this fair value gap, bounce off of it, take out the daily high, and then retrace back into the premium of this dealing range. And so here, this is the hourly time frame. I zoomed in more, but yeah, we retraced back into the 10-hour fair value gap. We respected it. We climbed higher, took out previous day high. And then coming into the morning session, I noticed, hey, this 4-hour candle, this 8-hour candle closed bullish. I can anticipate a continuation higher. I held my trade. Bam, we just continued to expand higher, and then we ended up retracing back into the premium of the dealing range, into the equilibrium level. And super easy trade, right? I had a higher time frame objective, I had a model, I had a entry pattern, which was the 10-hour fair value gap. Everything there is met, the components are there, and yeah, that wraps it up for today's live stream. Thank you guys so much.